recording it. Okay, so this is the PDF. You will get it, 15 pages of examples of very important patterns. And we begin once again, friends, very simple rules, right? I stop after each topic. You ask questions, I read and reply. Please don't try not to interrupt me with the chat, because I can see it on the second screen and it sometimes confuses me. And well, silence your cell phones so they will, they will not interrupt me here as well. Just kidding. And we begin. Okay, so double top, double bottoms. There are few double top or double bottoms that can appear on the chart. There is a classical way to look at that, classical way to trade, which I don't think is relevant anymore for this market condition since 2007, which, as I explained. Okay, and there is alternative way to trade double top, double bottoms, as we do with divergences. The classical one is this way. We have a double top. By the way, please remember that double top or double bottom must come at the end of a trend. If it's a top, I want it to come after the up move. If it is a bottom like it's here, I would like to see it coming after the down move. Okay, remember that. Now we always entering after divergences, right, with bearish candle, etc., etc. On the classical way to trade double tops and double bottoms, we mark the highs, we mark the lows, we look for the break, for retest. Here we sell with stop loss at the half of the way, the half of the dip here, right? And target twice bigger, which is duplication of this range on the way it broke down. Okay, in this case, double bottom, once again it must come after down move. Okay, it must break, retest, break, retest. It retested with two candles, and then we join. Right? Stop below the half. The target duplication of that. It's the classical way to trade double tops, double bottoms. I prefer to look from the very bottom or from the very top with patterns and divergences, because I think this way we risk less for potential much bigger move. And who does not want to risk 0.5% or 1% aggressive on conservative, right? To possibly get 2, 3, or even 4 or 5% from one move when it comes. Everyone wants. This is the beauty of combination of tops, bottoms, patterns, and divergences. Any question as for now about classical double top or double bottom? By the way, friends, soon I will go and discuss about head and shoulders, and I promise to share with you some unexpected things that I guess no one of you saw or knew. I promise you will be a little surprised, but that's the truth. Any questions, friends, about Yeah, today in this webinar. In this webinar. How many tops or how many candles we can have between tops and bottoms? Well, there is no rule. Actually, I would say minimum 5. 2 down, 2 up, and 1 in between. But it's not a rule. Here I want to see the I rule. I want to see a move. Right? I want to see a move. Okay? I actually want to see moves in between the tops. Okay? By the way, friends, another thing I still didn't say, and we still didn't have webinar about it. We will have about how to count waves. Double top or double bottom should come. Should come. At the end of fifth wave or after fifth wave with the first correction. I don't want to confuse you, just watch. There is no specific way to count, just with the eye. We see the first move up here. We see the first move up. We see the correction, right? Which is number 2. We see the number 3, we see correction number 4, and we see number 5. Then 1, 2, and here is a double top. Okay? No specific rules to count, just with the eyes. That's how I do, always. I don't have any other techniques for that. The same here. 1, 2, 3, right? Big 3, 4, 5. So it could be between 3 and 5, or it could be, as it was here, right? With between 5 and first correction here. Okay? Just remember that there is no specific rule for that. Once again, just with the eyes. But this is the most reliable thing for double tops / double bottoms. But it asks in which time frame we should see double tops or bottoms. Any time frames. As higher it is, as more reliable it is. And Dave says, but you want to trace before other top, right? Let me just make sure I understand. You see, Dave, 2 tops, right? I have a move, correction, move. I have a tops, then I break the low, and I want a retest of the broken low. I don't care about the highs anymore. I just want the break below the low and the retest of the low. Alright? Any more questions, friends? Is there always one smaller top or bottoms between 2 pips or low? Yes. Unless you count these 2 spikes on same level as double top here. See? Here, like here, okay? And this way, well, of course, you can't count candles between, okay? Thomas says, do we need to see RSI cross 50 to take trade after double top or bottom? No, technically no, but it's a good confirmation, yeah. I don't have RSI here, but yes, if it breaks the 50 with the break of the low, it's much better confirmation, yes. And German asks, do we have to look for retest to enter? Yes. Because this way, German, you will have risk-reward ratio with 1 to 2. You will risk this stop loss, but will look to take twice bigger, which is duplication of all this range. Okay? And this is the advantage of trading the patterns. Okay, and Dave says, if you don't get a retest, it is no trading. Yeah, there is no trade. There is no trade. The classical tops or bottoms have to retest. If it does not retest, well, it could be not reliable enough, and then it could easily fail. Okay, beautiful. Now for several versions of tops and bottoms. Double top Adam and Eve. This is how it's called on this world. This is Adam. Well, all the men can understand why. And this is Eve. Right? Well, once again, all the men can understand why. Right? I mean, the spike is Adam and the big cycle is Eve. Alright? I didn't create it, friends. I didn't invite it, so all the all the thing is for the technical analysts, right? So this is how it's called. What can we say? Now, once again, there is no difference between this one and the classical as we saw before, right? This is the same top, but here in this case we have quick spike down, then top, which moves on the same area more than 4 or 5 candles, at least. Okay, at least. You like these pokes, don't you, Dave? You like these pokes. Well, I feel, Dave, that very soon I will call you the poke trader. The PBB trader. Poke the Bollinger Bands. Very soon. This day this day comes. The same rules, friends. Once again, break of the low, retest, and down for duplication. Okay, there is a type of double bottom of Adam and Eve. This is how it looks like. Okay, Adam, bam, up, Eve, riding the same area, right? And the same stuff, double top, break, retest, up. Okay, break, retest, up. Okay, where's this lows? With this high, sorry. Of course, the opposite version, Eve and Adam. See, right, down, bam, up and down. The same rules, break, right, retest, and down for duplication. Even Eve, it looks ugly, isn't it? It looks ugly, isn't it? It looks like fat, big, ugly double top. This is, by the way, the one I don't like personally. The one I don't like personally, but this is how it looks like. Okay. All right. And this is top and bottom, Adam and Adam. Spike, spike, down. Spike, spike, up. Okay. This is how it looks like. In this case, by the way, if this is the high and this is the close, right? You see the retest return all the way down. This trade was failure trade. Okay, this trade was failure trade. Right? This is a good example to understand what is Adam and Adam. Okay, and I just want you to understand something, friend. It's not so important the names, right? You see a top, you see a bottom, that's okay. Don't pay attention for all these crazy people like me, just kidding, that look for the names, Adam, Eve, okay? Don't care of that, okay? By the way, Dave, pay attention for something good. This is, at the end, it was triple top, triple bottom, right? Triple Adam, beautiful, yeah. It's a triple bottom. This one, yes, Dave? This one, yeah. 1, 2, 3 bottoms. Okay, but if Dave, if you want to call it names, it's Adam. At the end, it was Eve, and then Adam again. So it's AEA, right? But once again, the names don't so important. Friends, any questions about double tops, double bottoms? I think that's one of the most easiest patterns to trade. I think it's one of the most easiest patterns to trade. For the question, should the double top be on the same level? No. It could be with very small angles, that's okay. The most important thing, just not big, crazy angles like this. Okay? As long as it's small, it's okay. Not big. Okay? Questions, please. If there is no question, we are going to discuss about flags. Interesting. Yes, German, just one take profit target. Yeah. This is why it's very easy to trade double tops, double bottoms. Alright, flags. We have sideways flag and we have channel flag. Let's see the differences to understand better. Move. Once again, I want to see a trend. Then I want to see sideways move. Okay, I want to see sideways move. It is much better if you have at least one spike in the sideways move, which tells you it is false break. It's much better. Then the next break will be much more reliable. I know it sounds crazy, but that's the truth. Okay? The beauty of trading flags, is the risk-reward ratio. Okay? The risk-reward ratio. Now, pay attention for this is my mistake here. I'm sorry for that. The entry is with the break. Here you don't must to wait for a retest because in this case it's 50-50 or happen or not happen. It's not the classical double tops or bottoms. So you can enter with the break. Break, I mean a close above. Okay, a close above. Stop, of course, middle. But the target is you take the line from the very bottom all the way for the lowest boundary, not the highest. This is my mistake here, I'm sorry. Okay? For the lowest boundary, and you duplicate this line from the break. Once again, you take from the very low of the very beginning of the move all the way for the lowest boundary. Why the lowest boundary? Because this is the up move. If it's opposite, you look for opposite, of course. Okay? And this will be your target from the very, very, very beginning, from the very break. This is the beauty of trading flags, the amazing risk-reward ratio. Okay? You duplicate the whole move here. Okay? All this move. Duplicate it from the break. I mean duplicate for the possible target, right? Okay? That's the beauty. Very simple, very nice. There are no specific rules. How do I see flags? Is that a flag or is that a flag? I always say and I always mean, as tighten it is when it's very, very tight, very, very tight, and long for sideways, it's very, very, very good. Because sometimes, you know, it looks like bam, 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 all the way with big moves there. It's not so reliable. It's not so reliable. When it's tight and long, right? It means the market has more power to go with the break. Imagine if it was very deep sideways like this. it means the sideways moves took very aggressive bulls and bears in, and the break cannot be so reliable. In this case, when it's tight and long, it's very good and reliable. And we go up in this case. The channel flag, also the same, but it looks like a channel. A down move from the very beginning of the move. See? Okay? A channel and a break. A close and a duplication here. From the very beginning this way. By the way, is this a flag also? Yes. This one, sorry. This one. See? It is a flag. It's tight and long. But why it's not good? Because the leg before the flag is very small and you can't trade it. Okay? Is this a flag? Yes, it is. See? Yes, it is. Is this a flag here? Yes, it is. Very tight. Okay? The risk reward must be at least 1 to 2.53. So this trade should be good enough considered to take. Okay? Let's see. Wait. Looking for one spike in the direction it started from, but won't necessarily always see one. Correct? Yeah. You will not always see one, but in this case you have one. You see? This spike and this spike, you have two actually. Right? If you take a look on this sideways, also you will have this spike. Okay? Yeah. You don't always can get them, but it's better to have them. And 90% you will have them. Here also, if you take all these lows, this small low will be the spike. See? If you consider this as flag, this small, it will be the small spike, the false break. It's better because this way a reliable move comes after a false break, one or two breaks, right? One or two breaks. It's very important. It's well, I can say it's 100%, but yeah, it's very important. Okay, let's continue. Next question. Dave says, had it broken down instead of up, would it have been a double top instead of sideways? Not sure I understand. Forex example. Let's see. It's a good question, Dave. It's a good question. What happened if it would break down in this case? Right? I understand correct? If it breaks down, can it be considered a double top? Definitely. This is not double top you would like to trade because it's not deep enough. And you will probably not have enough stop loss and target to play with. Understand what I mean? This is the opposite. The flags you look to be tight. The double top and bottoms you look to be fat. Right? With a range. Because you want moves there. Okay? But yes, that's very correct. Okay? That's very correct. Okay? Now, Igor says, let's see, what is the reliability of double tops and flags and how do you define boundaries of the flag? It's a good question, Igor. It's a good question. I will answer the second question first. You go and draw lines so you have as many spots as possible. If you draw from here to here, you will have only two. I don't care the beginning is here. I want as many spots as possible. Alright? Just as many spots as possible. By the way, flags not always parallel. They could be with different angles. Okay? So this can go up, this can go little this way. Okay? It could be not exact parallel always. Also very important. Okay? Okay, it could go this way and small up also. Okay, just as many spots as possible. Dave asked a good question. Is the channel flag the same 1, 2, 3, 4, 5 count wave? No, it will automatically comes or after the first or after the third move, automatically. This is how it works. I know it sounds crazy, but at least this is something we don't have to look for, right? About the question of Igor, what's the reliability of double tops and bottom and flags as well? Well, all the patterns, maybe except the V pattern we will discuss at the end, and wedge, all of the rest work 50%. 50% of the times, maybe even 45%. What makes them good to trade is the risk reward. Okay? Because on double bottoms you have 1 to 2. In flags you have 1 to 2.5, 1 to 3 even. That's what makes it very, very, very good risk reward. Wade asks amazing question. Can you trade this with similar reliability on any time frame? The answer is yes. But you should remember one thing. If you trade on 5 minutes, you can have 4 or 5 or 6 false patterns in a row because they appear often. Right? This way you can have 4, 5, 6 false and then 4, 5, 6, 7, 8 correct. Because they appear time after time, one after one. Okay? The possibility to have more false in the same time or more profitable in the same time is the same. It's bigger, sorry, not the same. It's bigger, sorry, than on bigger time frames. Okay? That's about that. Another flag, as you can see, once again, as many spots as better. But by the way, this is I know why I put it here. What happened when you have such situation? This was the target, right? What happened if I went up, but then I have been blocked by divergence? What I do? Do I wait or do I get out? What do you think, friend? Yeah, get out. Get out. As you have the divergence and candle patterns, get out. If you want to take still the possibility the divergence will not hold and the market will continue until the next divergence and then retrace all the way, you just can close 80% and let 20% work with break even. Break even on 20%. Okay? Very good. Well done. I always say I never go against divergences. Yes, sometimes they continue too powerful, too unexpected, too long. But, and you will see it by yourself, there was never situation that a divergence, that the market, sorry, the price never came back for the fourth divergence appeared. Never. It just can't happen. In this case, once again, get out of the trade if you at least with 80% and 20% break even on stop loss and let it work, or just full profit. Okay. Michael asks, which one is considered a stronger signal, flag or divergence? I don't know. I don't know. Because for divergences is not a strategy. Divergences is a theory. Like trading with patterns. It's not a strategy trading with patterns because each pattern has its own rules, right? So each pattern is a different strategy. Divergences is full theory. As I began with the first webinar of divergences, a trader who understands why it happens and how it works will make money. And big money. Because, and that's the truth, all the big traders, the hedge companies, everyone use these principles. These principles. They cause the divergence with the difference of the mass, as I explained on the first webinar. This is how it works. Well, yeah, that's a good sentence. Wait, flags can lie, divergences don't. That's exactly. Well, you will see when on the next webinars you will understand where this all my sentence and theory come from. Okay. Let's see. Momo says, how many candles should we have for a flag? That's a good question. I would say at least 4 or maybe even more. Momo, it's a good question. At least 4 or even more. Even more. Michael says, we just closed trading. Yes, if you have a divergence against you, and I think it is relevant for each and every strategy, Michael, close the trade. Okay. Marcel, my friend, about the MACD talking, I don't think it's. We are here to talk about the patterns, okay, and how to get out of them of the trade. Okay. If you change the parameters, of course it will be different. I use always the default. Okay. Cool. We continue for wedges plus triangles. Okay. About your question, Marty, 4 candles. At least 4 candles to have a flag. So you can start making and creating borders. Okay. Not time frame. Okay. Oh no, it's relevant for every time frame. Every time frame. But as bigger the time frame, as bigger the reliability. Okay. Cool. Wedges and triangles. Bullish wedge must come at the end of downtrend line. Must come at the end of downtrend line. Okay. Downtrend. And has to have both boundaries pointing down at the same direction it came from. It came from down, the both boundaries must point down. They will go and try to meet each other, right? Because they are not parallel, but they both must point down. To make wedge or triangle reliable, count 7 spots on the boundaries. 1, 2, 3, 4, 5, 6, 7. The break comes on 6th or 7th spot. Spot number 3 or 4 could cause false breaks. The break comes, once again, reliable breaks, on number 6 or 7. Before a break, Sometimes the market just retraces down and then continue to break. Once again, it comes to 7, little retrace, and then bam, all the way. See another bearish wedge example from the euro dollar daily 2008 year. 1, 2, 3, 4. Sideways to 5, down to 6, retrace, and bam, 7. Alright? There is no rule how to count 1, 2, 3, 4, 5, 6, 7 spots. Just with eyes. It's not science, so there is no specific exact rules, just the eye rule. Okay? Stop losses and targets. The target is, let me just begin with this one. Oh no, it's triangle, sorry. The target is, okay, the meeting of the very first high or low, okay, and the second low, and the second low, the second opposite spot for up move. Okay. Now remember important thing, friends. If the line is with a very strong angle, probably it's not good enough. Why? Because yes, it looks good if we try to aim all the way here, but don't forget it will go more and more and more lower as long the market moves. Okay, that's why if from spike to spike the angle is too deep, too big, what you do is you go for close price, you draw a line between them, and that would be your target. To understand what I say just better, this is what I mean. Not this line that take us all the way down here, although it is something that we can dream about, but you draw from close to close with acceptable, reasonable line, target, and that would be your target. The entry is with a break. Stop loss is above the broken candle. The candle that breaks, sorry, not broken. Okay? Risk reward must be at least 1 to 1.5. Wedge is very reliable pattern. It works 70% of the times. As I said before, as not as double tops, as flags. As smaller and tightened the risk reward, the bigger percent of the times it will work. If the risk reward is lower than 1 to 1, do not 1 to 1.5, sorry, do not take this trade. Any questions? Same as, is the entry is on the close of candle that breaks? The answer is yes. Well, yes, thank you for that, Wade. Yeah, I love this. I love them too. Wedge with wedge, by the way, always will come with divergence. Always. No other way. Anyone can guess why? Maybe? Yes, that's the one, exactly, Igor. Because the angles of two trend lines are getting closer and closer. They are not parallel, but this one aiming up still, but with very, very, very flat, almost angle, and this one aims to meet the previous line somewhere here, right? These two trend lines says opposite things. This says the bulls are still here. This says the bulls are losing power, right? And this what caused the divergence exactly. Very good, well done. Yeah, so the answer are almost all correct. Well done, friends. The target, yes, the target is from spike to spike, from the first high to the second low, or opposite, of course. But if the target is too deep, go from close to draw the line. If the candle which broke the line is small, what happens with stop loss? It's amazing question, Momo. What happened in this candle is very, very small. Then go for the range between the break, cut by half, and put stop loss at the middle. Very good question, Momo. Thank you for that. Very relevant because it happens. What happens if the candle is very, very small? What do we do? Stop will be at the middle of the range before the break. Well done. Bullish triangles. Almost as flags. Pretty much the same as flag, right? Up move or down move. Okay? 6 or 7 spots. 1, 2, 3, 4, 5, 6, and the break. The break will come on 6 or 7. False break could come at 3 or 4. Stop loss, middle of the range when it breaks, okay, as was on the wedge just before. Target is the whole move from the very beginning for the lowest point when the triangle begins. Sorry. Okay. Go and duplicate it from the very, 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 very high, from the very break, to take all the way until this target. Bearish triangle, the same. Okay. Down move, this is the 1, 2, 3, 4, 5, 6 break. Okay. Enter with the break of the candle. By the way, this is the euro yen we have had. Okay. Target. See? Okay. This is the target. Duplicate here. Right? Simple. Very similar as the flags and the wedges, approximately, right? Yes, German asks, the wedges have to be at the end of a trend generating divergences. Yes, triangles will be during the trend. So if you have down move, triangle, it will probably continue down. Head and shoulders, friends. This is very, 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 very unknown thing. Please listen carefully to understand better. First of all, on previous webinar, bloody gold. Why bloody? We took profits here, Igor. We took profits here, so why bloody? Yes, we are in loose position right now from 1620. You did not take profits. Haha. Okay, next time you will listen. Don't worry, don't worry. This still relevant, 1650 still high resistance. Should be okay, no worries. Head and shoulders. Okay, looks like that. Shoulder, head, which is higher than the shoulder, and another shoulder, which is pretty much on the same area as previous shoulder, maybe a little higher, but lower than the head. Okay, logical, simple. Classical analyze says, look for the break. By the way, between the shoulders there is a neckline. Classical analyzing says, look for the break, for a retest, and sell. Stop above shoulder, target deep as the head. It's okay, but I prefer to start trading the shoulder with the divergence. Head and shoulder will always come with divergence as well. Always. Okay? Classical, it's okay to trade classical, but I don't think it is relevant anymore since the last crisis on the market. I think the market changed. But, okay, so we prefer to I prefer to start to trade with not the shoulder, but the next, not the head, sorry, but the next shoulder. Oops, sorry. Where did it come from? Okay. Okay, with divergence as well, as I explained on previous webinar. Now, this is something you should know, friends. We have to count the head. What do I mean? Okay, you take Fibonacci levels. You add this level 123.6. Let me just show you how you do it. Let's go back for gold. Gold. Okay, that was the head and shoulders here. Okay, you take the Fibonacci level. Okay, you count the shoulder. See, you count the shoulder from high to low. Double click Fibo properties. You add this level 1.236, description 123.6. The head must stop around 123.6. The head must stop around 123.6. It could break, but it must retrace immediately in. If it does not, it is a false head. I go back for examples. That's the same example. See, I count the shoulder for Fibonacci 123.6. It must stop here. It never did. And this head and shoulder at the end was fake. It was one of the reasons why I chose to close all the trades I have had. Remember, I have had selling from 1585, 1602, remember? And we closed all here. Alright? Now, this is true head and shoulders. We count, you see, we count the shoulder. This is 123.6. It blocked. It was blocked here. Then look what happened. Did anyone of you knew it before? Cool. Are you surprised? Mikael says no. Why should I? Yeah, I know, it's very interesting. I know. When I first saw it, I was, you know, I was kidding because who says, you know? And I first discovered that with two hedge companies, traders. And when I went back, see more and more and more and more, I just was amazed. I thought, oh my God, it couldn't happen again. It couldn't happen again. Of course, it's not 100%. Sometimes fake head and shoulders will work as well. But I would say 90% of the times, seriously, this is how it works. This is how you recognize fake or not fake head and shoulders. There is no 100% ever. You understand it. I shouldn't say that. But 90% of the time, seriously, you can go back and see it just, oh my God, it happened again. It happened again. It happened again. It works. It's crazy. And that's the beauty of 123.6 level of the FIBO. Fake goes, I don't care if it goes against as long as it retraces immediately down. It could break up close above, but then retrace up again. It's okay. Okay? But if it closes above 123 and stay there, fake. And we don't want to deal with fake stuff. All right? Well, I wanted to keep that for you, friends, and never talk about it yet on the live rooms. We will now, after I shared, we can now talk on the same language and see it happens again and again. Thank you very much, Wade. Thank you. Thank you, Mary. V patterns. It's not Vlad patterns. It's not Vlad patterns. Right? It's just V patterns. Okay? Very risky. Works around 40 times, 40% of the times, 35, 40. But the risk reward is a killer. Look for straight move at least of 8 candles on the same direction, at least 8 candles, sorry. If it is a down, if it's a bullish V, okay, if it's a bullish V, look for strong support to be broken before the first leg of the V. Okay, strong support broken before the first leg of the V. The first bullish candle pattern you get, you enter a trade. Stop below last low, target at least previous high. At least. Risk reward must be at least 1 to 4. Well, 3 also okay. 3 also okay, depends on how reliable is the pattern here, and if you have it with divergences. If you have it with divergences. Okay? It must be break of support before, because trading the V means trading the false breaks of support or resistances. It says actually it will not just retrace to test the support, it will fail that. That's what means the V pattern. Bearish V looks like that. It must break serious resistance. Okay, but in this case I went for bigger time frame, so you can see it. This case you can see it clear, because on lower time frame we have 12 candles, but it looks not good. It looks not. You can't see the wave, the V like this. This is why I went for bigger time frame. You can see only 3 candles in a row right here. Okay, but this looks much better. It looks like clear. Pam, pam. Alright? First candle, you attack. Okay? Risk reward 1 to 4. 3 okay if you have divergence. If not, 4. Very risky trade. Very risky patterns, and you actually trade here the false breaks of resistances or supports. Okay, sorry. All right. Any questions, friend? Well, yeah, Marty. Amazing, isn't it? Marty, you have my okay to share it with Cayman on his ways. It's okay. I wanted to do it anyway when we have discussed. Let's see, Mihail. Could apply to gold 1 hour chart. Let's see. 1 hour chart. No, because you have red candles here, you see? You have red candles here. It interrupts us. But if you go for 4 hour charts, let's see. 4 hour chart is clear. If you have a candle, yes, you can start attack. And this will be actually the basic of trading the false break of this resistance, and then, but still no. It's still, let me see, if you count this way. I'm not sure the risk reward will be good, Mikhail, you see? I'm not sure the risk reward here will be good. If it does, yes. Oh, earlier. Let's see. This break up or this? Well, we have to look for at least 8 candles on the same move. Okay. Oh, it's early now. Yeah. It's early now. We have to look and see how it behaves. Yeah. Sorry, just mistaken. Ooh. Take it back. Zigzagging market. Zigzagging market. Well, this is summer. Is a V pattern similar to head and shoulders? No, not at all. Not at all. Marty says, yeah, okay, yeah. Igor says, could we mistakenly see a flag? Where, Igor? Where? Any more questions, friends? Any more questions? This, Igor? This one? Yeah, it's a flag. But you couldn't trade it because the break took all the profits, right? the close took all the profits, so you can trade it. This one, yes, yeah. About the Swiss yen, yeah, CEO is correct, right. Swiss yen is confirming the V. Is confirming the V. See? The only problem is that it started to confirm the V. It started to confirm the V, well, after a few breaks here. It's still okay from my point of view. It's still relevant, and I will still be looking for this baby to sell. I am still out. I will be looking for this one, and we will take a good one for that. Friends, thank you very, very much for your time, for being here. Thank you very much. I'm very happy to know that you enjoyed and you find it useful. Well, I know many of you already knew most of the patterns, but still, there are some things that no one says, and I think you should know. Because this is the truth of the market, and if you don't know the truth, how can you actually trade? Friends, thank you very much. I will see you, of course, tomorrow on the live room. And about your question, Dave, 1, 2, 3 BAM pattern, I don't like it so much. That's why I didn't discuss about it. Thank you very much for that, Roshin. Thank you very much. And I love to do it. Thank you, friends. See you tomorrow. Thank you for being here. Beautiful day, beautiful night. Bye-bye.